The KEI Industries Q1 FY27 earnings conference call hosted by Nuvama Institutional Equities. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Achal Lohade from Nuvama Institutional Equities. Thank you, and over to you.
Yes, thank you. Good afternoon, everyone. On behalf of Nuvama Institutional Equities, we are glad to host the senior management of KEI Industries Limited to discuss the Q1 FY27 earnings. We have with us Mr. Anil Gupta, Chairman cum Managing Director of the company, Mr. Rajiv Gupta, Executive Director, Finance and CFO. We'll start the call with the opening remarks from the management and then move to Q&A session. Thank you, and over to you, sir.
Thank you, Achal. Good afternoon. I'm Anil Gupta, CMD KEI Industries Limited. I hope that you must have received a brief of our Q1 results. It must be with you. I'll give a brief. So the net sales in Q1 of FY26-27 is rupees 3,185 crore against 2,590 crore last year. Growth in net sales is 23%. However, the total wire and cable sale in Q1 has grown by 24.4% against previous year. During Q1 26-27, operating margin has improved to 12.43%. Margin has improved mainly because of the product mix and operational efficiencies. EBITDA in this quarter is rupees 415 crore against rupees 297 crore last year. Growth is around 39.5%. EBITDA net sales margin is 13.04% as against 11.49% in the same period previous year. Profit after tax in this quarter is 274 crore against 195 crore. Growth in the PAT is 40%. PAT net sales margin is 8.61% against 7.56% in the previous year same period. Domestic wire and cable sale in this quarter is rupees 2,784 crore. It has registered a growth of 29%. Export sale in this quarter is 341 crore, out of which against rupees 375 crore previous year. The export is impacted because of non-execution of several orders of Middle East because of the war with Iran, and also due to the custom duties issues in United States. However, for a full year guidance, the export will be grown substantially and will be in line with our guidance given earlier. Total sales of extra high voltage cable is rupees 186 crore against 126 crore in the same period. Growth in EHV sale is 47%. The contribution of sale through distribution network, that is B2C, is 59%. Total active working dealer of the company as on 30th June is 2,128. EPC sale is rupees 43 crore against 61 crore last year. Out of the total sales of EPC, EHV EPC execution sale is 18 crore. Sales of stainless steel wire in Q1 is 53 crore against 51 crore in the previous year same period. Pending order book is 4,292 crore. out of which EPC is 271 crore extra high voltage cable 793 crore, cable domestic 2,400 crore, and export orders pending are 822 crore. The long-term rating from KEI India Rating and Research and ICRA is AA+, and short-term is A1+. Book value as on 30th June is 725.94 against 697 as on 31st March 2026. Cash and bank balances as on 30th June is 1,054 crore, which includes QIP balance of rupees 303 crore. Interest income from bank deposits or others in Q1 is 14.59 crore, which is included in the other income. It was 28.77 crore last year, in the previous year. The company had raised rupees 2,000 crore through QIP on 28 November 2024, out of which company has utilized QIP fund of rupees 1,785 crore up to 30th June. And unutilized amount is 303 crore, which includes the interest on FDRs of QIP amount. Future outlook. During Q1, the company has incurred a capital expenditure payment of rupees 191 crore, out of which Sanand capex is 180 crore. Total capex done in Sanand up to 30th June 26 is 1,722 crore. Another rupees 300 crore will be spent in this financial year. Company is expected to incur capital expenditure of approximately 600 to 700 crore annually for next 3 to 4 years. Capacity utilized during Q1 is approximately 72% in cable division, 61% in house wire division, 91% in stainless steel wire division, and 45% in communication cable. Sanand capacity addition is taking time to ramp up, and in coming months capacity utilization will increase month after month. So now we have sufficient capacity to grow in wires and flexible segments for next 2 to 3 years. Based on the strong demand in domestic and overseas markets, we are hopeful to grow more than 20% in next 2 to 3 years. There is a good demand in data centers and related energy segment, in power transmission and distribution segment, renewable energy like solar and wind, electric vehicles, infrastructure, railway electrification, urban infrastructure, manufacturing in domestic as well as in global market. Also, the wire demand is strong in housing sector and in commercial spaces. So this is a commentary from the management side.
From market comparison.
We are very bullish about the market. We hope that with a strong market outlook in domestic as well as our export markets, company will outperform in the domestic as well as export markets, and will be continuously growing year after year. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Natasha Jain from Phillip Capital. Please go ahead.
Thank you for the opportunity, sir. My first question is on the wires and cables margin. Now, there has been a sequential sharp rise in wires and cables from 12.4 to 13.6. if I see sequentially the OPEX number, that's pretty much flat, despite we've gone aggressive on the retail side, which is a high margin but a high spend channel. And then even full commissioning of the Sanand plant should bring in some cost on the P&L. So could you throw some light here that what line item has remained consistent? Because ideally OPEX probably should have grown faster, and even on a year-on-year run rate, this is the slowest that we've grown in terms of OPEX.
As we have earlier also highlighted that as the incremental sale is going up, so the fixed expenditure does not increase in that way. So accordingly, the expenditure versus sale percentage, if you compare, it is low, and little bit because of the product mix, it is getting changed, and some export we have the good margins order, so all are reflecting in the P&L of the balance sheet, and we have already crossed now hurdle, which was earlier that less than 11% operating margin we were operating. So now that hurdle we have crossed, and we hope that now we will be in the range of 11 to 12% operating margin for the coming year.
So you mentioned that you've gotten some high margin export orders. I remember in the previous many calls you've always highlighted that export is a similar margin business for you as like it's in domestic. So have we now got orders which are better margin?
It is always when the demand is strong, and in the global market the demand is strong, so little bit it is increasing. As you also witnessed that our earlier the retail sale was close to 51% contribution, which is now increased to 59%. So put together all reflecting in the P&L.
Got it. And sir, on the wires and cables segment, the next question is, the value growth has been 25%, but if I see now, given all peer set numbers have come out, I think the industry has grown by 35%, 33 to 35. Given pricing growth in itself is north of 28%, I know you don't give volume breakup, but could you at least tell us qualitatively as to are we prioritizing EHV or losing market share on the LV side, or what's happening in the volume mix?
But it is not the case of the losing market share, because the demand is very, very strong. Because every sale required the capital. So whatever capital we are having, we have earlier guided also to grow close to 20% plus kind of growth, because we are continuously having a CAGR growth target of 20% plus. Accordingly, we need to put more and more also on the capital expenditure. And yesterday we also announced our new capital expenditure in our Bhiwadi factory, that is Salarpur, where we will put around another 700 crore rupees to put another factory in next 2 years' time. So it will go hand in hand. So whatever capital we are having, we are allocating at the same time towards the growth of the company as well as for the creation of the capital expenditure. So because of that, we are not comparing anyone else, whatever they are doing, but we are growing whatever we are. So close more than 20%, our target was there, and we are continuously focusing that.
Got it. And so Salarpur is 500 plus this additional 700, right? Which takes it to 1200.
No. This, as in the commentary, Anil said, every year our target is 700 crore rupees per year.
Right.
So the total capex of Salarpur is 700 crore. So in the current financial year, 300 crore will be remaining capex of the Sanand, and another 300 crore to 350 crore we will use in Salarpur. So then in the next year also, we will put the balance expenditure in the Salarpur, and then we will use the another capital expenditure in the new lands, that is maybe in Baroda or maybe in some existing location.
Got it. And sir, just one quick question, the last one. If I see inventory in your balance sheet, that has also increased sharply. So could you also throw some color in terms of what proportion would be, say, the exports which we could not do sitting in our inventory versus any inventory gains?
Major part of the inventory is increased mainly because of Sanand capacity is ramping up. So once the factory is new, the full inventory we need to create over there. So the major increase due to only Sanand only. And another maybe 60 to 100 crore in the finished goods. Maybe sometime it is delayed dispatch, or in the export case, even though the sale has happened by way of bill, but because of the India's adjustment, if the finished goods has not reached, we need to reversal. So because of that, the inventory is highlighting high and the export is low. But actually the sale has happened.
Understood, sir. Thank you so much. I have more questions. I'll get back in the queue. Thank you.
Thank you. Kasha.
Thank you. We take the next question from the line of Praveen Sahai from PL Capital. Please go ahead.
Thank you for the opportunity. Just to further clarification on the margin side, because in the P&L we can see there is a change in the inventory, which is on the higher side, nearly around 600 odd crore. So is there an inventory gain as well you had a book for this quarter, Q1?
See, the inventory gain or loss is the part of the every quarter on quarter and year on year, because prices are up and prices are down. So that is not the major factor for the inventory increase. Inventory increase, as I just explained, because of the new factory of the Sanand, where all the raw material and work in process and finished goods is starting to have that kind of capacity. And second, when we do the export sale or institutional sale at the quarter end, there is a reversal if the material has not reached to the customer. So because of that, even though the sale has happened, but as per India, sale has to reverse. So that's why the inventory is looking like this.
Okay. Second question related to Sanand. So how much of the Sanand contribution for this quarter, or what you are expecting for FY27?
So Sanand phase 1 capacity has already reached to 50% utilization as on today, and in coming months it will ramp up further from there.
So just to referring to your the media interaction, sir has highlighted nearly around 3,000 odd crore of additional revenue from the Sanand for this financial year. So this financial year you are 3,000 looking for from the Sanand, and how is that?
No. Actually, in media interaction, actually it was a little bit of a slip of tongue. We expect around 1,500 to 2,000 crore revenue from Sanand in this financial year, which will come in the contribution in this particular in FY27.
But the overall growth will be more than 20%, because as you see, when the new factory is there is lots of challenges for manpower, then machine, then the other environmental factors. So that's how it is taking time, and month after month the production is getting increased over there.
Okay. Thank you, sir, and all the best.
Thank you. Participants who wish to ask a question, please press star and 1. We take the next question from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes.
Sir, with respect to Sanand, we have already spent around close to 1,700 crores for the capex, and we will be spending another 300 crores. You initially guided that we can do from Sanand facility around 6,000 crores of revenue. Am I right?
Yes, sir.
So yes, sir. I just want to understand in Sanand what kind of products are we catering to, and phase 2, in which you will be spending additional 300 to 350 crores this year. Are we planning to add the existing capacity, or are we planning to add new high margin cable and wires?
Sanand project not yet completed. Phase 1 has completed. That is for low voltage and medium voltage power cable. Then we added the machinery over there, which is operational now in the second quarter for the electron beam cable. And now we are in the execution for the extra high voltage power cable, for which we are making a 152 meter tall tower over there. So by March 2027, our extra high voltage power cable project also will get commissioned. So by next year, the full capacity will be available, and close to overall capacity in the next financial year, 70 to 75% we will be in a position to utilize for next financial year.
So the entire 300 crores will be spent on the extra high voltage cable?
No, it is a part of the project. The total cost of the project was 2,000 crore.
Okay.
So already we spent 1,722 crore rupees, and balance remaining will be spent in the coming 6 months.
Just a follow-up here. You said around 70 to 75% utilization you will try to achieve next year. That closely translates to 4,000 crores of revenue. Is my calculation right?
Yes.
Okay, understood. And sir, with respect to the margins, you in the earlier guidance you mentioned that there was change in product mix which led to the margin expansion. Can we? Is it because we had there was a good amount of contribution from extra high voltage cable, or can you just specify what kind of product led the margin expansion?
It is a mix of 3-4 things. One is extra high voltage power cable contribution has increased. Second is the overall retail dealer distribution contribution has increased, and because of the top line higher, the expenditure versus sales ratio has gone down. So it's a combination of 3-4 things.
And so, just a follow-up here, what will be the incremental margin, if you can give a ballpark figures, when we are selling an extra high voltage power cable versus low and medium power cable?
Our extra high voltage operating margin was close to 15%, as compared to low voltage and medium voltage power cable. Institution side was 10.5% and retail side was 11% and export was more than 11%.
So out of the 6,000 crores of revenue expecting from Sanand, can you give a split between how much can we do with respect to extra high voltage? I just want to understand.
1,300 crore capacity belong to extra high voltage power cable, and balance for low voltage and medium voltage and electron beam cable.
And so, with respect to the 700 crores capex every year which you want to do, is it on the extra high voltage side, or I just want to understand the market of extra high voltage?
A new investment will be for low voltage and medium voltage, which we have just announced yesterday.
Mm-hmm.
Because extra high voltage power cable capacity we will be expanding further only itself in Sanand. Whenever we need, we will add 4 lines here.
And so, what is the total market opportunity from extra high voltage?
As of now, it will be more than 3,000 crore.
Okay, and you are the only player, or is there any competition?
No, there are universal cable also.
Okay.
And there are imports also.
Understood, sir. Thank you so much, sir.
Thank you. Participants who wish to ask a question, please press star and 1. We take the next question from the line of Umang Mehta from Kotak Securities. Please go ahead.
Hi, thanks for the opportunity and congrats on a strong margin print. So first question was again on margin. So you mentioned product mix and efficiencies in the operations. So EHV, so 5% going to 6% won't move the needle too much, right? And secondly, in terms of operational efficiencies, if you can share some more color. And thirdly, just wanted to check, have you changed anything on wires pricing? You were earlier looking to reduce the discount versus peers. Is that something that is helping your margins?
So, देखिए जैसे मैंने बोला उमंग जी 3-4 things where the pricing plays a role, then the overall growth of the company and resulting in expenditure versus sales ratio. So in each and every market we are trying to build our product well placed, because we are spending in the advertisement, we are pushing through the IPL, so our brand are very popular. That's how our dealer distributor sale is also reflecting from 51%, we have now reached to 59%. So our focus is to shift the market where the lower working capital are there, how we can improve the margin, whether from retail or from exports, and ultimately it is resulting to increase 1%. So now we are in the trajectory for the future where 11 to 12% operating margin we will be operating. So earlier our hurdle was reaching out to 11% plus. So now we have crossed that hurdle actually.
Understood, sir. And sir, second question was on this growth versus margin trade-off. So I understand where you come from, where you don't want to grow, or maybe from working capital perspective, you want to restrict growth to a certain percentage. In counters where peers are growing faster, or where you might be letting go of some business, is it easy to win that back when the situation turns? How do you think about that on competition front?
Sir, we are very old in this market, and continuously since last 15 years we are growing at a 16 to 17%. Then we started our growth rate to 17 to 18, then 19 to 20%. Now we are targeting 20 plus because we are a debt-free company now, and we are continuously allocating our capital in two parts, one for working capital and another for the capital expenditure. So certain discipline and capital allocation need to be there in the company so that long-term goal, sustainable manner we can achieve. So that's how we are going ahead with our original plan of which we given you in 2024 while we were raising the QIP. So the same kind of growth plan we were maintaining and we will be maintaining. So these kind of discipline also we will be maintaining, and those who are those investors, those who are dealing with us since last 5 years or even 10 years also. So we are very conservative people. Whatever we say, we try to deliver more than that.
Got it, sir. Thank you so much and all the best.
Thank you, Mangi.
Thank you. We take the next question from the line of Disha from Trinetra Asset Managers. Please go ahead.
Good afternoon, sir. Most of my questions are already been answered. Just a few questions from my side. Could you share the current utilization level across cables and wires for this quarter? And I hope I heard it correct. You said 70 to 75% of utilization would be by this year, right?
No. First of all, at present, because of increased capacity of Sanand, our utilization rate is 72%. And for the future, somebody was asking that how much capacity will be for the next plant, 6,000 crore plant. So I was explaining 70 to 75% we will be utilizing by next year.
Okay, for the next year. And so at what utilization threshold would the company require another major CapEx cycle beyond this ongoing expansion? You see the demand clearly coming up?
To maintain a CAGR of 20% plus, we need to continue growth of the capacity also. So for that, we have given our guidance to do the capital expenditure of 600 crore to 700 crore year after year, because we need to grow every year, so then we need to add the capacity also every year. Because whenever we go for a greenfield capex, it takes us to complete the process for the 2 year actually. Like yesterday we announced for the Salarpur project, where we will be investing around 700 crore rupees. So there also it will take another 2 years to complete construction, plant machinery, trial run production like this.
And that plant will be catering
in the current market, the demand is strong because of the electrical vehicle, data center, infrastructure boom, and the global demand is also very, very strong. Yeah, please, you are asking something?
Yes, sir. I was asking about this new capex plan that you have announced. That would be for EHV cables, right? You answered that question.
No. It is for low voltage and medium voltage power cable.
Got it, sir. And one on the EHV cable segment side, could you please update how much of this customer approvals or order inflow is coming from EHV? And at what point do you expect that EHV business will become a meaningful contributor to the consolidated revenue and margins, and will further increase the margins of the company?
No, whatever capacity we are adding for extra high voltage power cable, close to 9 to 10% will be the contribution from EHV cable.
Okay, got it, sir. That's it from us. Thank you.
Thank you, ma'am.
Thank you. We take the next question from the line of Achal Lohade from Nuvama Institutional Equities. Please go ahead.
Yeah, sir, thank you for the opportunity. First, in terms of the global markets, if you could talk a little bit in terms of how we are playing across the regions, where are we in terms of the scale up? What kind of mix can we expect over next 2-3 years within in the export segment across different geographies? If you could comment a little bit on that.
I'll comment on that. In different markets, we are targeting different sectors. Like in US, we are steadily working with oil and gas sector and also with the data centers projects. And now we are also working with some distribution projects in US. Secondly, in Australia, we are mostly working with solar and wind energy projects, and also some manufacturing factories, industrial projects as well. In Middle East, our major customer base is oil and gas refineries and upstream facilities where of oil extraction. So these are our majorly oil and gas market is there in Middle East. In Africa, we are working with distribution and transmission utilities and also the oil refineries. So this is the major focus areas in a few of the countries where we are working in our export markets.
And any possible mix you would talk about, let's say in 3 years' time?
See, it is very difficult to determine, product mix, because it keeps on varying. Whatever we have very versatile product range and production facilities, so we are able to adapt to any change in the type of products in our factories as per the market demand. But how the market demand emerges is very difficult to predict.
Got it. Sir, second question I had was with respect to Sanand plant. Given 2,000 crores of capex and the EHV and the non-EHV mix, how do we look at the asset turn and the total revenue potential from this facility?
So Achal, earlier we told that this total 2,000 crore will give us the production of 6,000 crore. But in the past experience, whenever we go for a greenfield project, after the commissioning of the full project, there is a scope for the balancing of equipment. So then another 100-200 crore we are putting for the balancing of equipment, which will give us the another 1,000 plus crore turnover. So the total capacity will reach around 7,000 crore within 2 years' time in Sanand. So that's how we executed in the past also. If you see our Chinchpada plant, initially it was only for the wire. Then we added the low tension power cable over there. Then we added the few more capacity over there. So as of now, this plant is giving us very huge turnover, approximately 225 to 250 crore per month turnover is coming from the Chinchpada plant. So that's how the balancing of equipment work actually.
Got it. Sir, if you could you did make a comment, demand is strong, but if it is possible to get some more color in the domestic market, how the different verticals within the demand drivers are doing, if you could talk a little bit on that as well.
See, major demand is there in India, mainly in power generation, transmission and distribution sector, and also the power energy user sector, which includes data centers, manufacturing plants, urban infrastructure and railway infrastructure. There is a strong demand in the housing and commercial spaces also. So these are the major sectors where the domestic demand is there. And now even the thermal power projects are also in strong construction phase. So that phase will also be bringing substantial demand in India.
Understood. Any of these are particularly doing very well and little bit weak? If you could call out a little bit, sir, on that.
No, I have no comments on that.
Actually, always it happens because it's a rotating demand. Sometimes demand comes from transmission, then comes from distribution, then again from the generation. So it's basically move on. So sometimes that the refinery projects are there, sometimes fertilizer projects are there. So the demand is also rotating because in every year the capital expenditure is rotating from one sector to another sector.
Fair point. Just last question from my end, sir, and we again go back to the queue. In terms of the demand supply, we see that practically everybody is adding capacity. How do you see this demand supply scenario? Is there any risk of overcapacity over next 1-2 years in your opinion, or things are pretty much tight for next 2 years?
So whenever there is an addition of capacity, it takes 2.5 years time to put up a project. Then another 1 year time for ramping up the production facility. You see in our Sanand plant, we started in 2023. Now almost 3 years is there, but so now the project has commissioned. Still we are ramping up, so it takes time. So from your angle, you must see that there so many projects are coming, but those companies, those who are putting the projects, they are putting the projects. The construction time of the project is also 2.5 years to 3 years time. Then for utilization of capacity is also 3 to 4 years time. So it is not the case that whatever we put, we will use the capacity only in 1 year. So that's how we are again guiding for the disciplined growth, that 20% plus CAGR growth we will maintain. So we are never targeting for a growth of a 35% or 40%. So that's how we are having the discipline, and accordingly the market is available.
Got it, sir. Thank you. I'll fall back in the queue. Thank you.
Thank you. We take the next question from the line of Manoj Gori from Equirus Capital. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations on strong margin performance during the quarter. So finally, the barrier of 11% has been breaken. So my only question to you would be that if we look at the end of fourth quarter FY26, we were talking about roughly around 18% volume guidance. In the morning, in the media interviews, we said around 25% kind of value growth for the current year. And now we are talking about 20% value growth on YOY basis. So
now also,
if you can clarify.
Now also, I'm sure that our growth in this financial year will be more than 25% in financial terms, in revenue terms. But normally in the interactions we generally like to be conservative instead of giving too bullish numbers.
मनोज जी, इशू क्या है कि जब भी हम कोई परसेंटेज बोलते हैं ना, आप उसमें 2-3% और ऐड कर देते हो, वो हमारी मुश्किल और बढ़ा देते हो आप उसमें. तो दैट्स व्हाई वी वांट टू बी कंजर्वेटिव.
सर आप आउट परफॉर्म करते हैं तो हम भी बढ़ा देते हैं नंबर.
वही तो, अब साहब के मुंह से आपने 25 निकलवा लिया, अब आप 25 तक तो सीमित रहो, अब आप उसके ऊपर बोल दोगे, वो हम कर नहीं पाएंगे. वेरी फ्रैंकली आज ही मना कर देते हैं, उससे ऊपर होगा नहीं. क्योंकि वो एक डिसिप्लिन नहीं है ना, क्योंकि किसी भी वैल्यू ग्रोथ को चेज करने के लिए कैपिटल रिक्वायर्ड होता है. देखिए, डिमांड इज देयर, बट इट इज नॉट द केस कि वी नीड टू पुट ऑल अवर कैपिटल ओनली फॉर ग्रोथ. देन हाउ we will maintain a future growth if we are not putting the capacity. So we need two type of capital. So that's why we want to be little bit conservative, but since the same kind of growth you will see for full year, whatever you have seen in the quarter one, because the demand is there, we have the capacity. But our request to all of you not to add into that expectation. So that is my humble request to all of you.
Okay, sir. So, but the only reason why I asked was because if you look at, there has been prolonged issues in Middle East. So the West Asia crisis definitely would be hurting to some extent on the exports also. So just wanted clarity because of the macro uncertainty. I do understand that the domestic growth opportunities remain very strong and robust. So just for clarity, the question came, yeah.
Manojji, we also explained in the past also, we need to grow. Whether we need to grow from export, from domestic institution, or from the retail network. Ultimately, sale is sale for anyone. So our purpose to focus on all the markets, so that if any time any market is having some problem like the Middle East problem is going on, we can compensate our sales from the other market. So that is the major focus area where we are trying to build that, whether marketing from export, marketing from domestic or institution. So we need to focus all these sectors. We cannot know in advance this sector will do good, which sector will not do good.
Correct.
So that's why that is our duty to focus all these sectors. And that's how we are continuously doing since last so many years. And your earlier wish was that when we will cross that hurdle of 11%, so with all of your blessings, we have crossed that hurdle, and in future we will be operating more than 11% EBITDA margin. That we are very hopeful.
Sure, sir. Thank you, sir, and wish you all the best, and I hope you break many more hurdles like this.
Thank you, Manojji. Thank you very much.
Thank you. We take the next question from the line of Akshen Thakkar from Fidelity International. Please go ahead.
Hi, sir. Am I audible?
Yes.
Hi, sir. Congratulations on a very strong margin performance. Just one clarification. In the past, when you have guided for EBITDA margins, you've included other income in the same. So right now, when you're saying 11 to 12%, it is, we should, read it as EBITDA plus other income, or this is only pure operating EBITDA margins?
So it is a operating margin I am talking, because you people are always evaluate us only on operating margin, and that's how the operating margin we are discussing.
Okay, so this doesn't include other income then, right?
Yes, sir.
Okay, great. And second, sorry to belabor this point, but on Sanand, if you were to, like Anilji was saying, it should do 1,500 to 2,000 crores this year, even if it were to come up, upon in a gradual manner, and exports will pick up. I'm just trying to think that what's the constraint to growth. I think you mentioned working capital a little bit, couple of times in the past and today as well. Just if you could help us understand a little better, because I think what's happening, frankly, is that streets extrapolating the metal price increase and thinking growth should be higher. And obviously, you're doing very well and no complaints there. And it's along the guided lines. But just to understand the constraints to growing faster, 20-25 का जैसे आप 25 ऊपर नहीं होगा, वो 35 क्यों नहीं हो सकता?
The constraint is basically the capital. You see, whatever capital needed. Sir, I'll tell you. When in a greenfield project, the production ramp up takes time in terms of manpower and machinery stabilization. So hence I said that month after month our new facility. If it is a brownfield expansion, it is easier to stabilize. But in a greenfield expansion, it has taken time. That is why month after month our production ramp up is coming up, and capital allocation is definitely a discipline which Rajiv has talked about, and what I am saying is that we will be growing more than what we are saying, much more than that, but we don't want to give very high numbers on as a guidance.
I think that philosophy is very well understood. We just love to see a little more, aggression on growth. Margin pe, what you had promised, you've delivered. Margins have come up. Very, very happy, and all the best to the team for the upcoming years.
Thank you very much, sir.
Thank you. We take the next question from the line of Rahul Maheshwari from Ambit Investment Advisors Private Limited. Please go ahead.
Good afternoon, sir. Excellent execution. Just two questions. First, on wires, can you elaborate what kind of growth are we witnessing? And also the dealer contribution has gone to 59%. How much more scope is there? This is first question. And on second, can you highlight that big projects like what the leader is executing on the BharatNet, etc.? How are we planned in those directions of executing the big order projects of the government? Thanks.
Sir, BharatNet is mainly for optical fiber cable supply and execution. We are not in the manufacturing of optical fiber cables, so that is out of our product range. And second question was
on the wires. Sir, I was mentioning big ticket size products.
Wire growth is already more than the cable growth because the construction phase is going on in the country. So overall, the domestic wire and cable business is very, very strong.
Sure.
And
yeah.
Yeah, please carry.
Yeah, go ahead, sir. Go ahead.
No, please. BharatNet, I have already answered that we are not in the production of optical fiber cable. So okay. We don't produce cables for BharatNet.
And just one as this thing that as you highlighted a lot of times that it requires capital and then it takes time to ramp up the capacity. But if the industry growth rate for next 2 years is happening at 30% or near about those levels, is it fair to say that you will up your guidance, or you will like to maintain at a guidance which you have mentioned conservative at 20% plus? Because
we will be growing more than what we are guiding, and we will be to the level of industry standard, but we don't want to give very high numbers.
Sure.
That is not our policy.
Okay. Thank you, sir, and best wishes.
Thank you. We take the next question from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Hello, sir. Thank you for the opportunity. I have a couple of questions. So firstly, our gross margin is at like a 4 or 5 year kind of high. I think we were at 25% gross margin back in FY22. So can you tell me if this gross margin level that we are at today is sustainable? Last 2-3 quarters, we have seen a very sharp improvement in terms of gross margin.
So because earlier the EPC portion was higher, now the EPC portion is not there. Only the pure the cable and the wire portion is there. Where because of that and the product mix and the export and the retail market. So if you see the continuous last 4 quarters from June onward last year, September, December, March, and this first quarter after quarter, whatever we have planned for the next year, we have reached to the situation where we were in the margin range of 11 to 12%. As I explained, whenever a margin increase of any company, there are 3-4 leverage. One leverage is the mix of the product, then second is the mix of the market, then the expenditure ratio versus sales ratio. So all these three are contributing towards the profit and loss. It is not only the one case where the margin has increased.
No, sir, that part is understood, sir. So just that, can we expect that gross margin should be in this range? But yeah, I get what you're saying. Okay, sir.
So gross margin, because as I said, that gross margin will be in this range only but sometimes sometimes the volatility in the market by way of the rate or by way of the demand scenario, always 0.25% to 0.5% margin fluctuates quarter to quarter basis, that you will see or you will witness in the past results also. But for the full year, it is average out always. So now we are in the trajectory where we will operate 11 to 12% EBITDA margin. That is operating side.
Got it, sir. Sir, I just have a few more questions. I think one of the things you mentioned was that export share of revenue will come back again. I think you mentioned this quarter has become the weaker side. What would be a target on a full year basis? What would we want to have our export as
Sir, ultimately, as I said, Anilji has said that growth rate will be close to 24-25%. So first So the first target figure will be that. Out of that, sometimes the export will grow more, sometimes the retail will grow more, sometimes the domestic institution will grow more. It will always happen from sector to sector. But our target to grow, to reach export at least 17 to 18% for the current financial year. Even the last financial year also it was 16%. So that we will be there.
Okay, sir. Sir, and just one last question. I wanted to confirm something you mentioned. You said this 2,000 crore of capex that we have done or we are underway, the revenue it can generate is how much you mentioned? I think I heard it as 7,000 crore, but I just wanted to confirm.
No, Sanand revenue originally was 6,000 crore, but in future when the project gets completed, with a few crores of balancing equipment, we always increase the production facility over there. So that's how it will increase to 7,000 crore within 2 years' time. That I mentioned.
This is LV and DHV all put together. You're saying 2,000 crores will give around 6,000 to 7,000 crores.
I can, what Rajiv wanted to say that instead of 3 asset turns of 3, it can go up to 4 turns.
3.5 times.
Okay, sir. Got it, sir. Thank you, sir. Congrats on very good set of numbers.
Thank you, sir.
Thank you. We take the next question from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Sir, this has been 2 quarters where not you, but most of the industry has not spoken much about volume growth. Revenue growth has been phenomenal. What I'm trying to understand is that your commentary, some of your peers' commentary also on demand has been extremely positive in terms of how they are looking at the outlook. So as analysts, are we not looking at the right thing? I'm trying to understand with volume growth not being there, is it just that the nature of the product has changed? Are you doing more high value products and that's how the business is going to set? I'm just trying to understand why that disconnect between volume growth, value growth, and the positive commentary that is coming from you as well as some of your peers. Just help us understand that a little better now.
Pulkitji, first of all, why we are talking on value growth? Because the government expenditure budget maintained in the value terms only. So if in the budget they have allocated the 11 lakh crore rupees, whatever the prices gone up or gone down, and this budget expenditure they have fixed for the capital expenditure